Hi, everybody. This is Gary Dean, and this is our video report for Monday, August 1st, 2016. So we continue to see a fractured market right here. We continue to see people saying that this time is different. You just have to buy. We continue to see sentiment at some of the most bullish readings I've ever seen. We continue to see the laggers now leading and the leaders lagging. And in my eyes, nothing is going to be different about this. We are going to get the same crash-like move. When this happens, I'm again not 100% sure. I don't want to set the wrong expectations for it, but it is coming. This time isn't going to be any different, and it's the reverse symmetrical triangle pattern. I mean, this target just to get to the bottom of this triangle is all the way down near the 1940 level. So that's over 230 points to the downside. But the actual pattern is you take 230 points and you subtract it from the break of the trend line. That is if the pattern was going to play out to its entirety. So you'd be looking at the S&P down at 1700. Will that happen? I don't know. I have absolutely no idea. What I am expecting is at least a test of the lower trend line. And really the first line in the sand for the bears, they need to cross this 2160. If they do that, we're probably going to get a very, very fast move all the way down to the 2121, where we'll most likely will get some kind of little bounce on it. But once this support area gives way, that's when I believe that everything just craters, and it's going to be in this style. And the reason why I'm saying that is this is all this market knows. I'm not saying anything that's out of the ordinary here. This market is either straight down or straight up, and when it's going up, it extends, and the bulls never ever leave the all-you-can-eat cafe until they're thrown out or they start throwing up because they ate too much. And then once they're done, this happens, and I don't see any reason why this time is different. Nothing has changed. Even when I'm going to show you some of the some different charts that will even show you more that this time isn't different. Here's the Dow, the Nasdaq, the Russell, and the S&P all in one chart here. Notice the Dow, which was the leader, now crossing through the NDX, which was the lagger the entire time. If you notice, when the S&P and the Dow were up here, the NDX was all the way down here. This has gone straight up. These are now coming. So you have the lagger that's now the leader, but we still have the Russell 2000 that's not even close to these highs. So the entire market is just it's fragmented, and nothing is running in sync, and it's a warning sign. And it's one of the reasons why I'm saying all these people that believe that this time is different and we're going to just continue up, they're going to be crying in tears, because we're getting every single signal that we've gotten in the past, and right before we've seen huge drops. So if they get caught on the long side and we see the S&P drop 100, 200 points in a week, you can't feel sorry for them, because they ignore everything that's right in front of them. So the leaders are now lagging. The laggers are now leading. Once this runs its course, they all go down together. Now, this is another piece of the equation, and this is the this is the VIX and the VXX. So why am I showing you this? The black is the VIX. The red is the VXX. So the short-term volatility. Every time we have seen the VIX bottom before the VIX did, the VXX, we've seen a huge spike. Now this time we saw the VIX go from 13 all the way up to 20. And VXX go from 18 up to 23. So this was, you can see where the VIX bottomed before, and right there you can see that the VXX was heading lower. Here's another time right here. You can see that the VIX bottomed before, and we saw another spike. Here's yet another time when the VIX bottomed before the VXX. This one was a huge spike. So why is that important? Well, the VIX actually bottomed all the way going back on June 15th and has not made a new low. And every single day for the last 10 days, the VXX has been straight down. So this is what I'm anticipating. The next move is going to be one of these huge spikes where it's a volatility shocker. And if you remember, when we got those huge spikes, this is what happened to the markets. We got these moves down. So nothing is different. Everything in the previous times that we've seen these big moves has been it's identical. So the reason why people are saying that this time is different, I really am scratching my head saying I don't understand what you're seeing. So again, the bears have some work to do. I think once it crosses through this support area, we get panic and we could see the S&P drop from 15 all the way down to 2015 in a very, very fast manner. But I don't be surprised to see these gaps getting filled. And again, the target on the downside is all the way down here, and everything that has taken place in previous big drops is happening right now. So with that, again, not sure when this all starts. It could start, may have started today, could start tomorrow, maybe it starts next week. I'm not sure. What I am pretty confident in is this time is not different. We're not breaking out into the 2350, 2400 area. I believe that we are going to be testing the 1950 before we get even close to that level. So with that, let's see what plays out tomorrow. I do believe that patience is going to be the key here, and it will pay off handsomely if you're expecting a move to the downside. So with that, enjoy the rest of your night, and I'll talk to you guys in the morning.